Welcome to our special coverage on IPOs, and today we are joined by the top management of Avalon Technologies, Mr. Kunhamid Bishya, CMD, and Mr. RM Subramaniam, CFO of the company, have joined us today. Welcome, Mr. Bishya. Welcome, Mr. Subramaniam, to our show. Thanks for your precious time, sir. Bishya sir, मेरा पहला क्वेश्चन आप ही से रहेगा सर. सर थोड़ा सा अपनी कंपनी की पूरी जो अभी तक जर्नी रही है उसके बारे में हमें बताएं.
Namaste to all your viewers, and thank you for having us in your show. हम 1996 में शुरू किया, US California में. That time lot of outsourcing was happening in software that was coming to India, and then hardware was going to China. So Bhaskar and me, two promoters, decided why cannot we make electronic products in India. So that was the vision to start, and that was started when we were very young, 27, 28, with the complete vision of making electronics in India. So today, after around 23 years, we have come all this way. We have around 2,200 employees. We do very, very mission critical products, whether it is in clean energy space, whether it is in the industrial space, or mobility in air and rail, as well as in communication. So very well diversified, and with a clear vision was make in India 20 years back. Today, everybody is talking of make in India today. Last 2-3 years, we have seen so much activity with the world wanting to make in India, moving away from China, especially with our US front end and the manufacturing in India. We're seeing a lot of traction in all these fields. Some of the world leaders, where we cannot talk about in the show, are working with us to make work. So, for example, if you're coming by train today, we do railway signaling products for India. Okay, for a Japanese customer, we do the interlocking systems. If you came by plane today, we make parts inside planes, inside for seating, for lighting, for smoke detection. We do parts inside certain aircraft engines. So it's a very rich company. It's not only electronics. We do quite a bit of the core businesses, electronic manufacturing, where we make the end product, और हमारे इंडस्ट्री में बोलते हैं box build. वो करते हैं.
Okay, sir. Mr. Subramanian, my first question is to you, sir. Can you tell us the name of the pre-IPO private placement players? Because you had done 160 crore CR pre-private IPO.
Okay. We did 160 crore of pre-IPO, out of which 60 crore was done by Unify Financial Private Limited. It's a PMS company, one of the leading PMS player based in Chennai. Okay, and 100 crore was done by India Akron Fund and Ashoka India Equity Fund. Both of them comes under the umbrella of White Oak Fund. So totally 160 crores was done as a pre-IPO, and the balance we are looking at to raise through IPO, which is about 865 crores, which consists of 320 crore of primary issuance and 545 crore of secondary OFS.
Bishya sir, what would be the use of net proceeds out of this fresh equity which you are going to raise?
So primarily for growth, we want to make sure with our orders booming, we want to make sure growth. So part of the funding is going for debt reduction, part of the funding is going for working capital requirements, and part of it is general purposes, which we have not decided exactly what to do. But mostly it is to position us for growth into the future. So whatever we are doing today is to make sure that we are well positioned with the large orders coming in.
Okay. Subramaniam, sir, what's the net debt position of the company right now?
Net debt position is about 300 crores. Okay, out of which about 230 crore approximately is short-term working capital loans. Okay, we are a working capital business predominantly, and the balance is about long-term debt. Okay, about 70 crores.
Okay. Vishal sir, what could be the shareholding structure post this IPO? Because I'm just reading that the promoters are selling some part of their stake to OFS.
I'll give you a range. I don't know where exactly it'll fall after all this. So the existing shareholders will be around 63 to 65%, and the promoters will be more than 50%.
50%. Okay. And Bishop, company has around 12 units in India and US. Can you tell us the production breakup and revenue mix in terms of domestic revenue and exports?
So exports for us, our customers in the US and outside the country, 62% of our business. 38% is domestic in India, and a lot of that going into MNCs in India also. Okay, it is for the India market. But saying that, that is where the customer is located. Okay, where the revenue comes from. But 80% of manufacturing is done in India. Only 20% is done in the US, where customers want us to make in the US. Our focus is complete to make in India. Now, the world talks about make in India. Now, we've been doing this for years. And just another note is that where they say China plus one product transferring from China, we've been doing this product transfer to China for years with getting the supply chain going in India.
And how's the scenario looking like? Because there are some talks that US into the recession, US is entering into the recession side. So how is the demand from the US side?
So since we are well diversified, so our fastest growing sector today is clean energy. When we say clean energy, today we're doing a lot of solar. We're doing parts of hydrogen electrolyzers, EVs. So this is an emerging sector for us. It's the sunrise sector. So as it stands, last year, we've been well spread in these 5 different verticals. Today, we are seeing clean energy pickup. So any lack of slowdown in the US will be picked up because our growth in the clean energy space is much faster, and we are seeing enough demand. So we are not as much worried about other industries slowing. Every industry goes up and down. For example, in the COVID time, our aero business went next to zero, but we didn't face it. We didn't have a problem. Our medical business went up. So we, at any time, one industry or the other will have a challenge. That's why we are well diversified.
Okay. Subramanian sir, there are some talks like your companies is dependent on a few customers. Can you tell us the name of these customers and the revenue segregation?
Yeah. So in terms of the sharing of the names of the customer, I can share few of them where we have got permission to use them. Remember, we are in a contract manufacturing business and we need permission of the customers to use it. Many of them are global majors. We can talk about Kyosan, which is a Japanese customer. We are supplying railway signaling equipment to them, and then Systech, which is based in US. Okay, and then Zonar and Haas. So these are some of the customers, but I don't want to get into specifics because these are confidential and we need permission from them. But it suffices to say that almost all of them are multinationals, global majors. Typically, their size ranges from anywhere between 5 to 10 times bigger than us. And one other data point which I'd like to bring it here is 80% of our customers been with us for 8 years or plus. This ratio can go down as we move and acquire new customers. But this again shows the stickiness nature of it. Once customer comes in, but they stay with us for a very long time.
If I can add to,
yes, sir. Please.
I can add to that. Unfortunately, we can't say it because of the DRHP requirements. We have some of the world's recognizable names working with us, whether it's in the air industry, whether it's in the auto industry. Haas, for example, makes CNC machine. We do all the electronics. We can talk about that. So each of these verticals have got 3 or 4 marquee names. Even some of the biggest EV guys in the world are working with us. So unfortunately, we cannot use the names. I wish I could.
But what's the revenue mix from your top 5 or 10 customers?
Top 5 customers is about 50% plus, and then if you look at 15 customers will contribute to 75. So it's well spread out in terms of the range. Okay, and we are acquiring much larger customers. This ratio will come down as we move forward.
Okay. Vishwa, what are your key raw materials and how do you source these materials?
So we have, since we are very vertically integrated. That means we not only do PCB assembly, we do all our sheet metal, okay, all our machining. We have another factory which does all our cables, cable harness assembly. We do all our plastics. So when you see an end product, these large parts, some of these products are 1 to 2 crores per product. Okay, that's how connect the railway signaling system or something else. So we do different parts from our different factories and finally assemble the product as a product. saying that all the metal and all the cables, all that will come from an India supply chain. But if you look at integrated circuits or ICs, that comes from all over the world. It could come from the US, it could come from small part of it coming from China, Taiwan, Europe, and then we bring it to India and assemble, because India does not yet have a base for integrated circuit manufacturing. We hope at some point of time our country will do that. Okay, so ours is a very global supply chain. So whether you make it in the US, whether you make it in India, whether you make it in China, wherever you do, our industry, there is a global supply chain. The more we can do out of India, that is our success. So when we take a product, we try to indigenize as much as possible. The history, today everybody's talking about China plus one. We've been doing that for 6-8 years back, transferring product from China, but looking at individual pieces, which we can make in India. That is our goal, make in India. Okay, not today, 20 years back.
Okay, yes, ma'am. Okay. Subramaniam sir, what's your revenue for this fiscal so far in net profit?
Yeah, in terms of November 22, it's about 584 crores, which is there disclosed in terms of revenue, top line revenue from operations. And EBITDA is about 68 crores and PAT is about 34 crores. Okay, been disclosed in the DRHP, and you're gonna have a look at it. Yeah.
Vishal sir, what's your guidance in terms of the expansion plan and company's journey for the next 5 years?
I think this is an opportunity not for Avalon itself, for our whole industry, because the world is opening up to Indian manufacturing. There's an opportunity for 4 or 5 companies to billion-dollar companies as we grow. And still we are small in a global scale. So the opportunity is there. It is how we take it, how to deliver it. And as you get the world majors moving in and looking at India's manufacturing, it's limitless is the growth. As long as we have the right policies, which the government is doing for us today, and making sure we have a population where we can generate employment. I think this is the start of electronic manufacturing revolution in India. It's not been there. We have not seen such activity with customers coming to India and looking at options, just not for Avalon, for the whole industry. We believe this is the inflection point. This is where I think our country can take it to the next level. We've been waiting for this time for 22 years. Others will have to convince the customer to come here. Today, they're coming by themselves. So this is an opportunity we have.
Okay. Subramaniam sir, can you just give me the order book idea? What's your order book right now? And what's the mix of this in this order book from your overseas customer as well as from the domestic customer?
Yeah. Typically, I know if you take a couple of years back, order book used to be 50 to 75% of the revenue in terms of revenue forecast for the year. But what we're seeing today is crossing the 100%. That's again, as Bichas have said, it's a output of the industry tailwinds and what we're seeing the opportunity which is getting thrown to us. As of November 22, our order book is about 1,200 crores. Again, the round numbers are approximate numbers. I'm giving 1,200 crores. Okay, and we are talking to more multiple customers, and in a typical B2C space, the ramp up is slow, but once they pick up, it picks up a lot. So today it's 1,200 crores, and generally our growth in terms of exports. As we said, it's about 60% plus in terms of export customers. The balance is domestic, and that ratio going forward broadly likely to remain same. Okay, but the Indian market is growing much faster. But just to add to that, many of the Indian customers are based in India are also sourcing for the global market as well. So we look at the net exports will be much larger, but overall we are seeing a robust order book.
Can I just add to that?
Yes, sir, please.
When Aram Subramanian is talking about order book, those are hard orders. Apart from that, we have another 500-600 crores in contracts.
Okay.
Okay, so that is for the next 2-3 years. It comes. So the order book is fairly steady.
So what kind of margins you enjoy on these orders? Like if we are getting some orders from the domestic companies and some of the orders from the overseas companies, is there any margins differentiation between the two?
No, I think the differentiation will be by industry. Okay, certain industries command a better margin, and certain technologies, whether we do command a different margin. For us, it is industry agnostic, because it's the same metal that we are making, cable we are making, or PCB. So depending on industry, there would be a difference, but I wouldn't say, that's why we are not in the consumer space. We don't do phones, we don't do, because it's a bit lower in margin. I'm not saying the business is not correct, but we look for high engineered products.
Okay. Any plan for entering into the B2C market, sir?
So as of today, I think there's enough business for us B2B. Now, saying that once that settles down, we also believe there's a big opportunity there. It's a different model, but there's an opportunity there. We will look into that into the future. Let all this settle down and let us take care of where we do the best.
Thank you very much, sir, for your precious time. It was nice talking to you, sir. And all the best for your stock market journey as well. And welcome to the stock market.
Thank you so much.
Thank you.
Wonderful talking to you. Bye-bye. Namaste.